Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, February the 6th, the year's 2022. Let's talk trading. It is time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. Keep in mind, always have your risk management in place. That way, you shall not lose or should not lose more than you're willing to lose on any one particular trade. Let's take a look here and see how we're starting off. Well, we are 79 pips above the monthly open, 106 off the high and 87 off the low. As you can see, the weekly candle is red. We had gapped up and we came back down to fill the gap. So we are 20 pips below the weekly open, 23 off the high and 7 off the low. And when we look at the opening range, we're putting in the opening range for the week. But notice the opening range for the month and the opening range for the year are pretty close together. So the opening range for the year being the high and low of the first day of the year, opening range of the month being the high and low of the first day of the month. So January, the opening range for January is the opening range for the year, and the opening range for February is our current opening range for the month. And right now, price is inside both of the opening ranges. And taking a quick look at the year, we're 4 pips below the yearly open. We touched the low of the inside bar that happened 3 weeks ago, the weekly inside bar that is, and then we rejected off of that line. And as you can see, we have a few pairs to trade on the daily inside bar. We have a bunch on the weekly, and we also have a few on the monthly inside bar. We are 7 hours into the trading day. No pairs are over 100 pips, and the pound is only at a 30 pip range. So we never touch the buy zone, but here in the short zone, you can see we've gone through it 1, 2, 3 times, and we're still below it. Now, one of the things that I guess is kind of hard for people to accept, because I've heard this for over a decade. They go, oh, you can get chopped up, it can go back and forth, it's seesawing or whatever they want to say. But the fact of the matter is, price has to range away from the open. It's just that simple. Otherwise, you're not going to have any movement. And we know even with the pound being at a depressed, average daily range of about 70 pips, those 70 pips are still going to cut through the buy zone. So here, it looks like we could have probably picked up about 10 pips off of this last trade here. And as you can see, price is below the open, and it's continuing down. And I read something that was kind of interesting. They were talking about you can consider your trade as an experiment. And I think we've kind of touched on this before. See, trading is kind of unique in that you can do something one time and it works. In other words, you exit profitably. You can do it a second time or a subsequent time and it doesn't work and you exit with a loss. But everything pretty much would look the same. It's just that you've got that random variable in there. You just don't know, because all it takes is just one trader to enter a trade and cause your trade to become a loser or a winner. So that's that quote unquote luck factor. But the thing about getting lucky is you have to play to win. You have to trade to win. So you can go back and do a hairy hindsight and see what you could have had, or you can say what you should have or what you would have done. But the thing is, you just have to do it, put your stop loss in place, and see what happens. The market will either smile upon you or it'll take your chips. But it really is that simple. Doesn't matter, how many indicators you throw on the chart, because nobody else is looking at your chart, and they really don't care. So we look at the rat zone, and the range is too low. And one of the things I'm going to probably discuss later this week, maybe even tomorrow, is a lot of times when we're watching these screens, we're looking at the charts, we are looking for a trade. We're looking for our setup. We're looking when to trade, when to take that trade. But another way of looking at it is where to take the trade. And so a lot of times, I guess, what are those guys? The market structure guys, they'll take a look at this chart and they'll say, okay, yeah, I want to go short anywhere above this horizontal line. That's where I go short. And then here, they might say, yeah, somewhere down here, this is where I want to get long. And everything in between, they're just going to wait. They're just going to sit and wait. And that is really hard for a day trader, somebody that wants to get in and out quick. I admit it, I'm one of those people. It's really tough just to sit back and watch all the opportunities to make, 2 pips, 5 pips, 10 pips back and forth, as opposed to just waiting, and waiting for it to get to this level or low, and then turn around where it'll make its ride back up. Because right now, what I see is this bar right here. I call that a return bar. So the open of that bar is 35.57.6. Call it 57. So I would imagine price is going to come back and get to 35.57. When? I don't know. Could be today, could be tomorrow, could be this week, could be next week, could actually never happen. Or it might be years down the road. But, just based on what I see, observations, how many times these big return bars, price returns to the open. So this was a news-driven event, the NFP on Friday. But as you can see here, price got close. No cigar, but it's coming back down to this level, and we just might see it return. In fact, we took out the monthly pivot, and looks like we almost got the weekly pivot there. Looks like price might be coming down to the weekly pivot, but we've missed the daily pivot. And I just gave away this chart, so missed the daily. And actually, let's see, 15 is the low. We've missed it by 0.3, so maybe it'll take it out in the next few minutes, maybe it won't. And we'll just have to wait and see. We are in the lower daily wick zone from the Friday candle, and so we'll be looking to go long at 35.30 and short at 35.04. Now the thing is, you could put the trade on right about now, and you could see, you could pick either direction. You got 10 pips to the north and about 15 to the south. Set your position size accordingly with your stop loss, and then take your chances, because price doesn't like the wick zone. You could say, well, there's this pivot up here, or rather this return bar I might want to shoot for. Or you might look at a different chart and say, well, everything looks like it's going down. Maybe it'll go down and crack the double O, hit 95, reverse, hit 90, reverse, maybe hit 85, and then go all the way down to the 60, 75, then 60, then 40 launch pad area. Either one of those scenarios could happen. Right now we're below the weekly open, so we've got to put in that the wick. So right now we got a very small upper wick here from the open, and we're putting in a lower wick. So if price were to return, it'd be a nice size lower wick. And once again, that's where statistics come in. We'll just have to wait and see, because sometimes you do get small wicks, and that could happen. So speaking of wicks, we're at the smart range chart, and I've made some updates. I'm going to have to send it out to the 2020 donators on the weekly range or smart ranges. I've added a couple of new wrinkles here. Right now, high-low range is 30, 0 percentile. Remember last week and the week before were both over 200 pips, so I don't know if that's going to continue. My guess is it probably won't, but that's just a guess. Okay, right now we haven't broken out of the high or the low. High minus close 24, close minus low 6. So we got to let this thing range. And then high minus open 3 and open minus low 27. Once again, we're just starting out the week. Nothing's happening. We'll wait for tomorrow's video and see just how much price is ranged. And the simple price action crossing horizontal lines here. Okay, you can see here the ranges are small because this isn't the best time of the trading day to trade these. So there was a couple of small breakouts here, but nothing to write home about. And the lower high, higher low, you see we had a trigger, good for a few pips. Looking, this is an M30. Come down to M1, you can see we have a lot of movement here, but off of that 3 ball. And once again, it put in a low here. You take that trigger of the lowest high, and you can see it did a nice little run, almost hit it again, and it's now moving back up. And then here on the upper, you see it had a 3, 2, and then another 2 ball here. And then you can see how price failed to close above this line. So if it's not closing above, it must be doing what? Closing below and dropping. So yeah, there was some chop here. It's like 1, 2, touched it. So maybe you don't take the first trade, you wait for the second trade, see what happens. And you could have been rewarded there on the fail. And you can see here that lowest or the highest low right there coming off of that 2 ball. And you could call it hindsight, but you can play this in real time every day. And once again, I was talking about, how many times has the price closed above or below the current price, just to give you an idea of which way price is going. And so when you see these numbers get small and they stay small, then you know price is moving in one direction or the other. But sooner or later, it'll reach a point where it starts to go back the other way. And that's when you can jump on and maybe you can catch the big ride. And maybe you can use the indicator too to help you time that entry. Does it work every time? Of course not. That's what I said before. But that's something you have to accept about trading. You make your trading plan, you follow your plan, and just because of the way the market is, sometimes you'll exit with a profit and sometimes you'll exit with a loss. You have to get used to it. So, fellow traders, I really hope you had a fun and safe weekend, and I'm wishing you a profitable week this week. And always remember and never forget, when you sit down at your trading terminal, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.